You're listening to Uranium Spotlight Podcast, sponsored by Purepoint Uranium Group. If you're following this market closely, you'll want to explore Behind the Curve, understanding when and how the uranium market turns, a new white paper that shows investors how to spot the cues that come before uranium prices move. And now, your host, Chris Frostad.
It's January 20th, 2026, and this week on Uranium Spotlight, uranium prices continue to firm. Geopolitics tighten control over global uranium supply, major economies revisit nuclear policy, and NextGen expands high-grade mineralization at Patterson Corridor East while launching its largest exploration program to date. The uranium spot price closed last Friday at $85.40 a pound, up from $82.55 the previous week, extending the steady advance that has characterized the market into early 2026. While overall spot market activity remained orderly, pricing continued to firm, reflecting a market increasingly focused on availability rather than opportunistic buying. Utilities remained selective but persistent, while discretionary spending appeared limited. The result has been incremental price strength rather than volatility-driven spikes. Beneath the surface, activity across the broader nuclear fuel cycle continued to signal tightening conditions. Utilities increasingly appear to be positioning further upstream, securing conversion, enrichment, and fabrication services rather than relying on just-in-time spot purchases. At the same time, producers remain disciplined, balancing deliveries against long-term obligations rather than feeding short-term spot demand. This combination continues to reinforce the view that uranium price support is being driven by procurement behavior and policy-level actions, not speculation. Governments and utilities alike are acting on the assumption that future availability cannot be taken for granted. For investors, the key takeaway is that price strength is being underwritten by structural considerations around supply security, not temporary sentiment. That is a constructive backdrop for the sector. The tightening behavior we're seeing now is one of the cues discussed in Behind the Curve, the white paper that shows investors how to recognize when uranium's real move is about to start. Get it now at uraniumspotlight.com. Last week, Namibia and Russia announced plans to fast-track a civil nuclear cooperation agreement, a move that carries implications far beyond reactor construction. While framed as a power partnership, access to uranium resources sits squarely at the center of the discussion. Namibia is the world's third-largest uranium producer, and deeper Russian involvement in its nuclear sector would further concentrate control over primary uranium supply outside Western hands. This follows a pattern already visible elsewhere. Russia maintains deep influence in Kazakhstan, the world's largest producer, and has expanded its footprint in Niger following the 2023 coup, where uranium production has shifted away from Western-aligned operators. Taken together, Russia now exerts influence over a substantial portion of global uranium production, with much of that material increasingly directed east rather than west. That leaves Canada and Australia as the primary large-scale suppliers accessible to Western utilities. Australia's output remains constrained by state-level mining bans, placing disproportionate strategic importance on Canadian supply. For Western reactor fleets, many of which are aging and increasingly dependent on reliable long-term fuel access, this consolidation of supply control heightens geopolitical risk. Securing uranium is becoming less about price and more about jurisdiction, reliability, and alignment. For investors, this matters because supply concentration outside the West increases the strategic value of uranium assets in stable Western jurisdictions and reinforces the long-term case for higher prices to incentivize secure supply. Germany's Chancellor Friedrich Merz stated last week that the country's decision to exit nuclear power was a huge mistake, calling it a serious strategic error driven by misjudged assumptions about energy security. This marks a notable reversal for Germany's political leadership. The nuclear phase-out was initiated in 2000 and accelerated after Fukushima in 2011, culminating in the shutdown of Germany's remaining reactors in 2023. Since then, the country has faced soaring energy prices, economic strain, and rising emissions during winter months when renewable output falters. German leadership has now indicated interest in assessing whether previously shuttered reactors could be restarted and whether advanced reactor technologies could play a role in the future. While specifics remain unclear, the shift in tone reflects growing recognition that reliable baseload power cannot be easily replaced. However, Germany faces the same constraint confronting much of the West: access to uranium supply. As Russia expands control over production elsewhere, securing long-term fuel supply becomes an increasingly complex challenge. For investors, this matters because policy reversals like Germany's signal growing structural demand for nuclear power, even in markets once considered lost. Demand growth is returning faster than supply can respond. Two developments in the United States last week reinforced the country's determination to secure uranium supply while expanding its nuclear infrastructure. First, Congress passed the Energy and Water Act, directing increased funding toward nuclear research and advanced reactor development, including expanded support for Oak Ridge National Laboratory. Second, the White House issued a proclamation instructing the Secretary of Commerce and the U.S. Trade Representative to use authorities under the Trade Expansion Act of 1962 to secure critical minerals, including uranium and its processed forms across the fuel cycle. Together, these actions make clear that the U.S. is preparing not only to expand its reactor fleet, but also to actively intervene in trade and supply chains to ensure fuel availability. Unlike some Western peers, the U.S. possesses the scale and leverage to influence supply outcomes through policy and trade mechanisms. For investors, this matters because government-level intervention accelerates demand visibility and reinforces uranium's role as a strategic material rather than a purely commercial commodity. NextGen Energy reported last week that it has significantly expanded the high-grade subdomain at its Patterson Corridor East discovery, while formally commencing its largest exploration program to date. Final drill results from the 2025 program increased the vertical extent of the primary high-grade subdomain by 23%, from 335 meters to 412 meters, with strike length now extending 210 meters. The overall mineralized footprint also expanded, growing to 700 meters vertically and 620 meters along strike, remaining open in multiple directions. Importantly, drilling intersected additional off-scale mineralization at depth, indicating potential for continued high-grade growth well beyond the currently defined system. Internal continuity remains strong, with multiple holes returning high-grade and off-scale intervals that continue to build confidence in the scale and robustness of the system. Building on this momentum, NextGen has launched a 2026 expansion program totaling 45,500 meters, including 42,000 meters at PCE, the largest drill program conducted at the discovery to date. In parallel, the company will conduct inaugural drilling at its 100% owned SW3 property, targeting highly prospective greenfield anomalies for the first time. For investors, the key takeaway is this: NextGen is demonstrating systematic high-grade growth while materially increasing exploration intensity. In a tightening uranium market, continued expansion of high-quality discoveries in the Athabasca Basin can drive significant long-term value and reinforce NextGen's position as a cornerstone name in the sector.
Before we wrap up, if you haven't yet read Behind the Curve, Understanding When and How the Uranium Market Turns, it's worth your time. It explains the real signals that reveal when uranium prices are about to move, long before the headlines catch up. Order your Behind the Curve white paper at www.uraniumspotlight.com. You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by Purepoint Uranium Group. While our passion for this sector is undeniable, remember that nothing discussed here should be taken as investment advice. Our goal is to provide a clear and balanced view of the factors influencing uranium prices. Join us again next Tuesday for Uranium Spotlight.